Welcome to VDR, your channel. Now we are explaining the differences between equity shares and preference shares. If you like this topic, please like, subscribe and comment. Okay. Difference between the equity shares and preference shares. Ownership. First point, ownership. Okay. The equity shares who buys? The equity shares who buys? They are called owners of the company. The equity shares who buys, they are called the owners of the company. Okay. Preference shares, the preference shares who are buys, they are called the long term creditors. They are called the creditors, but they are called as a long term creditors. Okay. Second point, voting right. They have voting right. Equity shares have the equity shareholders have the voting right to elect the board directors. But there is no voting right for who have the preference shares. The preference shareholders have no voting right. Next, dividend. So there is no fixed rate of dividend to the equity shareholders. There is no fixed rate of dividend to the equity shareholders because the company profits will be paid only after satisfying the preference shareholders. ప్రిఫరెన్స్ షేర్హోల్డర్స్కి పే చేసిన తర్వాతే రిమైనింగ్ అమౌంట్ ఏమన్నా ఉంటే అది ఈక్విటీ షేర్హోల్డర్స్కి పే చేస్తారు. దట్స్ ఆల్. దట్ ఈస్ ది రీజన్ ఫర్ no fixed rate of dividend for equity shareholders. In the preference shares, there is a fixed rate of dividend when the shares are issued by the company. So fixed rate of dividend is paid to the preference shareholders when the company acquired profits. Next, risk. There is in equity shares there is a heavy risk. In equity shares there is a heavy risk. Okay, the preference shares have no heavy risk. There is no risk to the preference shareholders. Next, transferability. Equity shares can be transferable from one person to the another person. Okay, there is no transferable of shares under preference shares. Preference shares cannot be transferable from one person to another person. Okay, convertibility. Equity shares are not convertible. So equity shares are not convertible from equity shares to preference shares. But preference shares. So but preference shares convertible into equity shares. Okay, preference shares are convertible from equity shares. Okay, preference shares are convertible into the equity shares. Next, repayment. The equity shares amount repayable after the end of the lifetime. So when company is winding up, then the repayment of equity shares until the last payment. సో అందరికీ పేమెంట్ చేసిన తర్వాత ఫైనల్గా పేమెంట్ చేసేది ఈక్విటీ షేర్ హోల్డర్స్ వెన్ ది అమౌంట్ ఈజ్ రీపేమెంట్. నెక్స్ట్, ద అమౌంట్ ఈజ్ రీపేయబుల్ ఆఫ్టర్ సర్టెన్ పేమెంట్ period of time. So preference shares are issued for 5 years, for 10 years. The time will be expired, the amount will be repaid to the equity preference shareholders. Okay, next, winding up. Winding up. Winding up. After paying the preference shares, remaining amount finally paid to the equity shareholders. When company is winding up, when company is terminated, so first of all pay the all liabilities and preference shares, then only pay to the equity shareholder. Preference shares have the preference, first preference over the equity shares. So preference shares ki first pay చేస్తారు, then only pay the equity shareholders when company is winding up. Okay, those are the differences between the equity shares and preference shares. If you like this topic, please like, subscribe, comment. Thank you very much.